Today's news cycles, passivity is the greatest risk an investor can take. Joining me to discuss this and so much more is Mr. John Grace. He is the founder of Investors Advantage Corp. He's also a highly sought-after expert with a national reputation for translating complex economic shifts into plain English. And with that, we welcome Mr. Grace to the show. Welcome, sir.
Thank you. Good to be with you, Guy.
So, John, for many years, we were taught, and I'm thinking about this aloud, but we were taught to really buy now and hold. However, the playbook is really breaking down in a different era, the market shocks of global uncertainty, is it not?
Oh, absolutely. And part of this, Guy, we've been here before. I want to make sure we touch on what we see just around the corner, and that's November 19th. So I want to make sure we cover that. But let's just look at what happened. There were not one, but two 50% losses in the same decade, '00 and again '08. And most of the financial services community just said you have to live with those losses. The truth is there's a better way to go. The question is, how do you limit the losses? I mean, whether you're rooting for the Dodgers or rooting for the Commanders, you have to have a defense strategy. Yes, when it comes to investing, most of us are 100% passive. Our accounts stay 5% cash, 95% invested. That's great on the upside, not so pretty on the downside. So savvy investors who hate losses more than they love gains want to do is limit those losses. So the first step is to figure out what kind of loss can you live with. Is it 10? Is it 70? Make it a specific target and then see what your portfolio did to you in 2008, 2022, first quarter 2025. A friend of mine, an attorney, earlier this year called me and says, "I'm surprised you answered your phone." I go, "Why?" He says, "My account's off 30%. Your clients must be pulling out their hair." And I go, "Well, we just got off the phone with an engineer and she was worried that her account was off 20%. It was off 5. So don't leave your assets on the Titanic just to be kicked in the assets again and again and again.
Absolutely love how you put that. Speaking of the Titanic, that happens to be one of the big boys. Let's talk about the big boys and girls on Wall Street, the big investors. What are they saying? What are they doing right now?
Well, what do they say about the politicians? Listen to what they say, but watch what they do. Have you noticed that NVIDIA's CEO has just unloaded $1 billion of NVIDIA shares? Now, tech has been the darling, kind of like the .com, but could it be that we're about to unveil a situation that would look like the .com era on steroids? Over 20 billionaires, including Pelosi, Buffett, and Huang at NVIDIA, have unloaded their tech shares. And we see, for example, with Bitcoin. I was on Yahoo Finance just last week in New York, and I said, I think it may have peaked. We may see crypto peak and start the fall, NVIDIA follow it, and here come stocks and real estate right behind it in unprecedented terms. And let's recognize that many of these investments, they take the stairs up, but they take the elevator down.
Sure.
So a lot of investors are unloading on Bitcoin. And what you are seeing right now is when companies buy back their shares, that's a good sign, right? But what happens when they're redeeming those shares? Is that a good sign? So that calls into question to see how November 19th unfolds, because that's when NVIDIA is going to have some explaining to do with their earnings, and I don't think it's going to be pretty. I'm suggesting that now is no better time to line up your ducks, to have a defensive strategy to limit your losses before we see this thing blow up right before our very eyes.
John, I got about a minute left, and I want to pose this question, and that is real life stories. That's what we try to do here on this show. We keep it real, for a lack of better words. In this case of clients who perhaps really build security through timely action and not being passive.
Well, yes, our 1-2 punch, Guy, is active management and greater diversification. So a real example, client sold 2 businesses, $5 million, 4% withdrawals, $200,000. For most of us, that's a magnificent retirement strategy. That would work for me. But let's suppose these folks woke up in Belgium, where they like to travel, and they discover, it happened again. Our $5 million just got cut by 50% to $2.5 million. Now we have to take our withdrawal and move it up from 4% to 8% to maintain our standard of living. This is why it's so crucial in advance. You know, you can't get insurance on a home that's already in fire, engulfed by fire. So you can't do it after the fact. You have to do it before the fact. And that's why in 2022, when the market was off 20 to 30, if investors, thanks to active management and greater diversification, were off 7 to 10%, you might recover from a loss like that. Once you get down to the 50s and the 70s and it doesn't seem there's no end in sight, it may be hard to recover. And let's recognize real quick, Guy, after the Great Depression, stocks dropped 89%, taking 25 years to get back to even, assuming you did not need any money. You kept all those shares that just kicked you in the assets.
Yeah, yet again, absolutely love how you put that. Mr. John Grace, Investor Advantage Corps, joining us right here on the Live Zone. We truly appreciate your time, my friend.
My pleasure, my friend.
All right, let's take you back to the White House, where any minute now we are expecting President Trump to hold talks with the Prime Minister of Hungary. Now, Viktor Orban has been described as the closest ally in the European Union to both Donald Trump and Vladimir Putin. I should also make mention that Mr. Orban